Welcome to the Trendline Gala podcast. Today we're looking closer at a topic that honestly is super relevant for anyone who's ever even thought about putting money into the market.
Yeah, or just clicked on an ad online.
Right. We talk a lot about the upside, growth and returns, but a real education has to include avoiding the pitfalls. This is all about protection.
And most people assume that to avoid a scam, you need to be some kind of financial wizard. They think, you need a degree in economics or something, that you have to understand all this jargon to spot something fake.
Exactly. They feel like if they just learned one more term, like short selling or whatever, then they'd be safe.
But here's what we know. Most of these trading scams, they don't actually rely on advanced tricks.
Right.
They use these incredibly simple, repeatable patterns that just show up again and again. It's almost like a template.
So they're just reusing the same playbook.
Every time, because
Wow.
it works on human decision-making. And if you can learn these basic patterns, scams become really easy to recognize and, easy to just ignore.
That's a great way to put it. We aren't here to memorize thousands of different names for fraud.
No.
Our mission today is just to understand the core framework of deception that really ties them all together.
Because that's what matters. I mean, if you look at the sheer volume of investment scams out there, it's huge.
Right.
You've got categories like advance fee fraud, where you pay money up front for some huge promised payout later. You have binary options fraud, which often uses these fake trading platforms to make it look like you're winning.
Oh.
We see high yield investment programs, HYIPs, they're often called, promising these crazy fast returns. And then there are impersonation schemes where scammers pretend to be, your bank or even a government agency.
That is just, it's overwhelming if you're a beginner. It feels like you have to know 100 things to stay safe.
And that's exactly what they want you to feel. Confused, overwhelmed.
So you don't look too closely.
Precisely. They want you focused on the flashy packaging, the crypto, the stock ticker, whatever it is. But if you strip all that away, the underlying methods, the way they interact with you, the behavioral traps they set, they're all built from the same 4 or 5 simple, predictable elements. And we're going to walk through them today.
So we're focusing on how the scam works structurally, not what it claims to be.
Exactly. And this is so crucial because these tactics target your behavior. They're designed to exploit how fast you make a decision. If they can get you to skip that one necessary step of just thinking clearly or doing your own research.
What people call due diligence.
Right. If they can make you skip that, they win.
So our goal is to teach one simple skill: how to spot these patterns fast so you can just walk away.
That's the whole game. If you recognize the framework, you stop the scam in its tracks. Scammers are selling a fantasy, and that fantasy is always built on one foundational lie.
Okay, let's break this down. What's the biggest lie they tell you?
The promise of certainty.
Okay, let's start there. We have to talk about the fundamental difference between real trading and what these scams promise. And this is the simplest truth. Real trading always involves risk.
Always.
Outcomes cannot be guaranteed. And that's
Yeah.
the bedrock of the financial world, right? Every legitimate company, every registered fund, they are legally required to tell you in plain language that you might lose money.
Yes, and that disclosure is mandatory for a reason. So the clearest warning sign, the #1 red flag, is any promise that just completely removes uncertainty. If it guarantees success and eliminates risk entirely,
It's not trading.
it's a lie.
I think this is where beginners can get a little tripped up, though.
Yeah.
They might not be looking for a 100% guarantee, but maybe something low risk.
Right, and scammers play on that. But a low-risk investment, say a government bond, it still has risk. It's just a tiny quantified risk you can read about. A scam, on the other hand, it has to eliminate risk entirely in its pitch.
Why does it have to?
Because the moment they admit there's any possibility of loss, you start asking questions. And admitting risk triggers your natural defense mechanism. It makes you want to do that due diligence we talked about, checking their background, reading the fine print.
And if you do that research,
The scam falls apart. So to prevent that, they just eliminate the risk from the sales pitch. The guarantee is a distraction.
so what are the specific promises, the key phrases that they use to build this fantasy?
They tend to promise 4 things that are just impossible in any real market. First, guaranteed profits. Often with a weirdly specific number, like guaranteed 1.5% daily returns.
Okay.
Second, consistent daily wins, the idea that their system never fails. Third, no losses, ever, which is a mathematical impossibility.
And the last one.
And the big one, Easy money with little to no effort from you.
That easy money one is the classic lure, isn't it? It just bypasses the entire idea of learning or working, which is what real success requires.
It's a direct conflict with what legitimate financial organizations advise. I mean, you look at resources from the SEC or investor.gov, and they're constantly telling you to do your homework, check disclosures, research professionals.
Right, that all takes effort.
It's a marathon, not a sprint. The scam offers the exact opposite. Success with zero effort, because the outcome is guaranteed.
So that clash effort versus ease, risk versus certainty, that's your first major red flag.
It's the easiest one to spot.
You used an analogy before about a sweepstakes. A real contest guarantees nothing, right? The thrill is the chance you might win.
Exactly.
But what if a sweepstakes promised you win every single time you enter? You don't even need to do anything. Just hand over your money and you're guaranteed to win $1 million today, every day.
It sounds too good to be true because it is. It undermines the very nature of a contest or a market. If winning is guaranteed, it stops being a lottery, and it just becomes a machine for taking your cash.
So any claim that trading is without risk, that's it. That's red flag number one.
And that's the hook. That's how they get your attention. But now they need to make you act quickly.
Before you have a chance to think about it.
Before you realize the guarantee is a lie.
Which takes us right into the next pattern. If the guarantee hooks you, the next step is to stop you from thinking. So, once they've used that guarantee to grab your interest, the second pattern is to rush you. Let's look closer at how they use time against you.
Yeah, red flag number 2 is using urgency as a weapon. This is a critical piece. Once the bait is taken, the scammer has to shut down your critical thinking. Time is their enemy.
The longer I have to think, the more likely I am to see that the first red flag is, well, a lie.
Exactly. If I'm rushing, I don't have time to check a database or call a friend or just sit with it for a minute. The whole goal is to make you decide before you can check anything out.
What are some of the common phrases they use to create this artificial pressure?
It's usually about creating a false sense of scarcity or loss. So you'll hear things like, act now, this window closes at midnight.
Great, that this opportunity will never return.
Or, there are only 3 spots left in this exclusive group. Or the classic, this won't last. They're all designed to create a sense of panic, that fear of missing out.
Which just short-circuits rational thought and makes you feel like if you hesitate, you're choosing to lose money.
And that's the key difference. A real opportunity, especially in education or long-term investing, it'll be there tomorrow.
Yeah.
If a system is genuinely good, it's not going to disappear because you took 24 hours to do some research.
I always think of those fake online sales, the ones with the massive countdown timer flashing red on the screen, saying the deal ends in 15 minutes.
Oh,
So
yeah.
you panic, you buy the thing, and then you come back the next day, and the timer's just refreshed. It's starting over.
It's a perfect comparison. The pressure isn't real. It's just a cheap trick to make you click buy. And the FTC, the Federal Trade Commission, they warn people about this all the time.
Because it works.
It does. Their advice always boils down to one simple principle. Slow down.
So just waiting 24 hours is the scammer's worst enemy.
It is. If someone is telling you that you have to act in the next 30 minutes or you can't talk to anyone about this secret deal, you know what they're doing.
That's red flag number 2.
And it gets even scarier in impersonation schemes when someone calls pretending to be, from your bank or a government agency.
How does urgency play out there?
They'll always manufacture some kind of emergency. They might claim your account has been breached right now, or you owe a tax bill that must be paid immediately to avoid arrest.
They need you isolated and rushed.
So you don't take that critical step of hanging up and calling the official organization back on a real verified phone number.
Okay, so the scam has the guarantee.
Yeah.
And they've used urgency to stop you from researching. Now they have to make that fast decision feel safe.
Which brings us to red flag number 3, selective proof.
Right, they need to convince you that success isn't just guaranteed, it's also super easy.
And they do that by curating a world where only winning exists. This is where the visual deception comes in.
What does that look like?
It's what we call selective proof. It's showing you only one highly polished side of the story. So they'll use screenshots of big bank balances or charts that only show massive profit spikes.
And glowing testimonials from successful clients.
Right, who all claim they bought a new car or paid off their house after just a week. It's so-called social proof. If all these people are succeeding, you will too.
But real trading is messy. It's full of losses and mistakes and drawdowns. That's just how markets work.
Exactly. And what is structurally missing from the scammer's evidence?
All of that. The losses, the mistakes, the long, hard time it takes to actually learn anything.
So they create this totally false picture where winning looks common and simple. They make the complex look easy by hiding all the hard parts.
It's like showing someone a photo album of only your best vacation pictures.
That's a great analogy.
You show the sunset on the beach, the perfect meal, but you leave out the flight delays, the lost luggage, the bad weather.
Yes. That curated photo album makes you think travel is always perfect and simple. Selective proof and trading scams does the exact same thing. By only showing the wins, they hide the risk.
And it makes the guarantee from red flag 1 seem believable under the pressure of red flag 2.
It's all designed to work together.
So if they give you guaranteed results, rush you to act now and show you only perfect proof, they have your trust.
For a moment, yeah.
But they still haven't actually explained how any of this works.
Because if they did, you could question it. And that leads us to the next structural component, making you dependent on them. This episode is sponsored by TrendlineGala.com. Quiz your way to financial mastery.
We're moving now to a pattern that feels particularly dangerous because it's not just about taking your money, it actively stops you from ever gaining real knowledge.
Right. The scam doesn't want you making independent decisions. They want you totally reliant on them.
So what does that look like in practice?
That's red flag number 4. Dependence over understanding. This is how the scam avoids explaining its non-existent method. They offer signals or alerts or copy my trade systems.
So instead of teaching me about risk management or how to read a financial report, they just send a text that says, buy this now.
Exactly. It completely removes responsibility from you, the learner, and replaces any real understanding with just absolute dependence on someone else.
You just do what they do, don't worry about why.
And that's the deep danger. When you replace learning with copying, you have zero ability to judge risk. You can't make independent decisions if that person you're copying suddenly vanishes.
Which they often do.
Or their trades start losing, you're left completely blind, you never developed the skills, you just developed reliance.
And this dependence, it completely undermines the safety nets that are built into the legitimate financial world.
It creates a dangerous bypass of all oversight. You have reputable systems like Fionari's Broker Check. These tools exist so you can check an investment professional's background, their registration, their disciplinary history.
The whole point is transparency and licensing.
Right. Before you trust anyone with your money, you're supposed to vet them against a recognized authority.
But if I'm just copying a trade signal from some anonymous person on a messaging app,
you're removing that entire layer of vetting. There's zero transparency. You're just placing blind faith in a black box.
And that lack of accountability is why it's such a huge red flag. It forces you to ignore all the established safety steps.
Real advice comes with disclosures and credentials. Fake advice comes with a copy my success button and a high price tag.
This feels like it works hand in hand with the final pattern, which is vague language.
Absolutely. Red flag number 5.
If they're making you dependent, they also need to make their systems sound so secret or complex that you don't even dare to question it.
That's it, exactly. If a system is legitimate, it can be questioned. It can be explained in understandable terms. Scams, though, they use language that sounds impressive but explains very, very little.
What kind of language should we listen for?
They love buzzwords and secret-sounding ideas. They'll talk about a proprietary quantum AI algorithm or unbeatable decentralized pattern recognition software.
Things that sound futuristic and high-tech.
But they never clearly explain how it works, or where the money is held, or who built it.
The goal is to use big words to make you feel like you're not smart enough to get it, so you shouldn't ask questions.
Precisely. Clear explanations can be fact-checked. Vague claims can't. They hide the risk structure, the cost structure, everything. If you ask a simple question and only get buzzwords back, that's a deliberate evasion.
We see this in everyday life, too. Think of those tricky subscription ads. They use vague language about a trial membership, but they don't clearly explain the auto-renewal fees until you're already logged in.
It's the same tactic. Investment scams hide their true risk and cost structure in the same way. The lack of clarity is intentional. It's a key sign that the offer is based on deception.
So let's recap the 5 components. We have red flag 1, the lie of guaranteed results.
Red flag 2, the weapon of urgency.
Red flag 3, the deception of selective proof, only showing the wins.
Red flag 4, the demand for dependence copy instead of learn.
And red flag 5, the shield of vague language to make it sound complex and secret.
As we get at the practical steps here, it's so important to remember this. Scams don't succeed because people are careless or unintelligent.
Right.
They succeed because the scam is designed structurally to bypass critical thinking. It's built to overwhelm you with perfect, urgent, guaranteed information.
So the goal for everyone listening isn't to memorize every fraud name out there. It's just to recognize these common patterns as quickly as possible.
We can combine these 5 patterns into one really simple, actionable rule. Scams almost never rely on just one warning sign.
Okay.
They're usually built with 3 or 4 of these things working together at the same time. They need the guarantee to hook you, the urgency to rush you, and the selective proof to calm your fears.
So if you're looking at something and you see multiple flags,
Yeah.
say it promises a guaranteed daily profit, that's flag 1, and it says you have to sign up in the next hour, that's flag 2, and they only show you screenshots of massive wins, flag 3.
Yeah,
You don't need to investigate any further.
that's it. You just walk away immediately. The simple skill is this. If you see 2 or 3 of these flags at once, that's enough. That's your signal to disengage.
Let's run through them one last time just to lock in the pattern.
Okay. Red flag 1. Guaranteed results. If they promise no risk, no losses, consistent profits, it's impossible.
Red flag 2, urgency. If you must act now or you'll miss out forever, that pressure is designed to stop you from thinking.
Red flag 3. Selective proof. They only show you wins. If they never mention losses or risk management, they are hiding reality.
Red flag 4, dependence. They pressure you to copy them instead of teaching you how to analyze things for yourself.
And red flag 5. Vague explanations. They use buzzwords but can't clearly explain how the money is actually being made.
Yeah, and if those start piling up, your action plan is simple. Walk away. But let's also talk about what real actionable safety looks like.
For sure. Beyond just recognizing these patterns, you need basic safety protocols. That means constantly monitoring your investment accounts for any suspicious activity,
Even small things.
especially small things. And you need to look out for unauthorized changes to your account info, your address, your email, your linked bank account. That's a huge red flag that someone has gained access.
And we keep coming back to vetting the professionals themselves.
Absolutely. Always check if an investment professional is licensed and registered. Use public databases like Funera's BrokerCheck. If they don't show up, they shouldn't be giving you advice.
And this is especially important for those impersonation schemes.
Yes. A scammer might call you unexpectedly, pretending to be from a government agency, the SEC, the FTC, and tell you your money is linked to a crime and needs to be protected.
They're using urgency and false authority.
And there is one absolute non-negotiable tell that this person is a scammer, no matter how real they sound.
What is it?
If anyone tells you that you must immediately transfer your money to protect it, or that you must withdraw cash or buy gold or gift cards or send crypto to some address, that is always a scam.
A legitimate institution would never, ever tell you to do that.
Never. A government body will never instruct you to move your money to an external account for safekeeping. And if they tell you to stay off the internet or not talk to anyone while this is happening,
That's red flag 2. Again, urgency and isolation.
it is. Recognizing their playbook gives you the power. Walking away early is a skill. It saves you money, it saves you time, and it keeps your mind sharp for real opportunities.
Which take patience and research.
The fundamental truth is that this stuff takes time to learn, and anyone who tells you otherwise is selling you a fantasy using one of these 5 patterns.
We hope this look into the architecture of scams helps you see that staying safe isn't about memorizing complex rules. It's about recognizing these simple, repeated patterns. If you're a beginner and want to build these instincts safely, you can take our free beginner trading quizzes at trendlinegala.com and practice spotting red flags before they cost you money. Next time, we'll talk about how simple trading rules can help beginners slow down and stay consistent. Thanks for joining us at Trendline Gala.